Ladies and gentlemen,
ladies and gentlemen, we got things going on. Alright, those at the pizza station, I know it's yummy and cheesy, but please find your way to a seat. Singing in my girl, we got pizzas, isn't that awesome? It's a taco family, so we got it. Alright, we're just going to kick this thing off. So, welcome everybody. I appreciate y'all being here. It's the Jersey City Tech Meetup, and we got a really awesome event tonight. So, thank you, round of applause everyone for being here, being part of this wonderful evening. My name is Ben Ferguson. I'm the founder of the Jersey City Tech Meetup. Hey, you in the back, come on over here. Those talking in the back, we're getting started, so I appreciate it. Come on over here. It's all right, you always got to come stragglers. Thank you all for being here. For those who don't know, the Jersey City Tech Meetup, I actually did a social media post today talking about how I love Jersey City so much. I traveled from Brooklyn to be here with y'all. When I ran the Jersey City Tech Meetup, I actually lived here, so I've been here for many years. And there's a really wonderful, special tech ecosystem here. And I found that it's different than all the tech communities out in New York City. There's something different. People have a different sense of community, a sense of belonging, and you just don't want to go across the river to New York to events, and I get that. That's why we built this thing here, and we're really happy to have everyone. And excuse me, if I can have everyone's attention, I appreciate it. We got a cool program going on, and then we're going to do some more networking at the end, so I appreciate everyone's attention. So, from a lot of the conversations I've had with the community, I ask people, what do you want, what can I help you with, what do you want to get out of these events? And so many people say, I need help fundraising. What do you do fundraising? Is it time to fundraise? Do I need to? Is it going to set me back? Am I giving up too much of my company? Connecting to investors, Ben. I'm like, well, that's a lot in one sentence, but let me see what I can do to help. So what we did is we set up this event in partnership with Booba from WalletMax, and we really wanted to just have a panel of investors saying exactly what they're looking for in startups. Because rather than me getting up here and having a panel of founders talking about what we're building, which we do a lot, and that's awesome, I wanted to flip the script a little bit and get a sense of what these investors are actually looking for. And honestly, in this age of AI and emerging tech and how quickly you can build things and solopreneurs can build out these teams of AI agents and code on Claude and all these things, the question arises, do you even need a fundraise? Or can you just bootstrap it until you get to revenue and then grow from there? So I don't even think it's just such a natural, when do we fundraise? I think there's a lot of questions starting with, do we fundraise? So we're going to cover all that tonight. Very excited about this program. A lot of awesome people here who are going to be talking. So I'm going to just do a bit of housekeeping and then we're going to jump right into it. I already welcomed you, so we're going to go to part 3. Actually, Jersey City Tech Meetup, for those who don't know, we host, I'd say, quarterly events. Everything in tech, ranging from blockchain to cannabis to social media marketing. Whatever is hot and happening, we like to talk about it and see what people are building and how we can all help each other and be supportive and be an awesome community. Everyone shout out to Laurie, that she is the social media manager and my fiance. So, let's see, who's new? Whose first Jersey City Tech Meetup event is this? Almost everyone. All right, cool. Y'all live in Jersey City, or did you come from New York? Where are y'all from? Jersey City, all right. Who came from the furthest away tonight?
Probably me, because I came from Berlin.
Berlin? Just for this event, all right. All right, we are global. We're a global community, everybody. Berlin. Anyone further than Berlin? All right, so I see some familiar faces. Who's been to one of these before? All right, round of applause for the ones who have been here before and the newbies. Thanks for being here. Everyone give it up for yourselves. We're really excited to have you. Be sure to follow us on social media. We got a lot of really cool things going on in upcoming events. So follow, tag, and we'll be sure to share you. So a couple sponsors I would like to shout out. And then before we jump into the program, I'm also going to give a little open mic situation for anyone who has an announcement or things you want to share with the community. So if you're building something cool, maybe have an upcoming event or hiring, keep that in mind because that's coming up next. But first and foremost, I want to called John up here from AndCo. That's this beautiful space that we're in. We've been doing events with AndCo for like almost 10 years now. They're always awesome community partners. They're incredible. The space is beautiful. So everyone give it up for John from AndCo. He's going to work.
Thank you, Ben. Hello, everyone. Welcome to AndCo. I just wanted to give a brief little spiel about co-working. If anyone's looking for a new place to work, we have private offices. We rent private desks. We are open daily. If you're looking for community, we do tons of events, not only Jersey City Tech meetups, but things like, these are our favorite. We've been doing them with Ben for 8 or 9 years now, so it's good to be back. We just got back from a camping trip where we brought some of our members on an outdoor excursion because we believe sharing experiences is important. It's nice to connect, it's nice to do a little mingling, but I think sharing your days with others is the best way to build relationships. So why not start with your everyday? Try out AndCo. Our website is andco.org. Thank you, Ben.
Yeah. So we have a couple other awesome sponsors who can't be here in person, so I'm going to do my best to give you a quick rundown of them, and then I'm going to follow up with everyone with an email so you can see all your resources available to you. The pizza is delicious, thanks to 2 Boots for donating some pizzas for this community. They are awesome and one of my favorite slices in Jersey City, and they want to donate some pies, so thanks 2 Boots. Connected is an awesome resource for founders. If you are bootstrapping and building a company, they offer free pro bono work from fractional accountants, salespeople, whatever you need. They have 6,500 experts around the world and offer free fractional support for founders for 6 months with no commitment. If after that you just want to walk away and take the free resource, you can do that. If you want to continue working with them, that's great too. So it's an awesome resource for founders. Check out Connected. And then finally, Intro Stars is a referral platform. So if you have a big network and you're looking to monetize your network, start a side hustle or just get more deal flow. If you're a founder or a salesperson, you can get an Intro Stars for free and get some more opportunities today. All right, I'm gonna send those clips to those companies and see if I did a good job on that. So with that, I like this part a lot. This is always a good time, but I have to stress that 30 seconds or under because we have a lot of people here and we want to get to the program. So if anyone has anything they want to share that's coming up, now would be the time. I want to start with who I probably could already predict wants to say something. Janet, who's amazing and has an event coming up on Thursday.
Thank you, Ben. Hi, everyone. My name is Janet Alicea, and I am the founder of Jersey City Tech Walk. And we organize curated tech walks around Beans on the first Thursday of every month. We have a walk coming up this Thursday at 9 a.m. right by the Exchange Place train station, so you can't miss us. And the theme is building community. One of our lovely co-hosts will be Amani Williams, who is the community builder here at JC Tech Meetup. We also have 4 other wonderful co-hosts. It's really an opportunity to talk with people that provide the tools and the mechanisms to help you build, whether product, relationships, networking, etc. So hope to see you. Thank you very much.
Perfect. I did that 30 seconds on the dot. Fantastic. Let's see everyone on Thursday. Who else would like to share an announcement with the room? We got Connor over here. Everyone give it up for Connor.
Hey, my name is Connor. We've built Alfred, which is an AI personal assistant for small business owners. And I would love to talk to anyone tonight who has a lot of experience building out basically multi-step conversational agents at scale, specifically within like the reliability aspect, and just talk, kind of talking to you, picking your brains a little bit, and figuring out how we can improve our process.
Awesome. Cool. Let's go to the back here.
Hey, it's nice to meet everyone. My name is Brock Shaw. I'm going to college this year, and I'd like to share a little thing I'm working on. It's called Ambitious Hacks. We host hackathons across New York, New Jersey, Jersey City, and it's specifically targeted for middle and high school students. We've had great success so far, and if you have a company or startup that's interested in promoting or connecting with more younger audiences, or maybe with more parent-focused audiences, please reach out to me. We're looking for sponsors as well, but we have great success. We're going to do one June 13th. Keep an eye out. So, yeah.
Awesome. Thank you so much. I love seeing young people building cool stuff. They're doing way more than I was at that age.
Thanks, Vivian. Hi guys, I'm Pallavi. I'm building Mood Eater. It is a gamified biohacking to take out food. If you're somebody that orders lunch from outside, every day at work, we have a real doctor verifying each takeout recommendation. And you don't have to browse or chat. You play fun games, or it's kind of like Tinder style, you approve or reject. So feel free to it's live at moodeater.com. Thank you.
Thank you. Well, we got over here.
I'm Jocelyn Miller. So I've been running Untitled Dream Job for like 10 years. I know most of you are like, following the dream, and it's awesome. And we help founders as well create creative career paths. We're hosting an event on May 20th that's a little bit more job oriented, like stop getting ghosted. Though we use AI to train on that, and a lot of the methods can also be used for reach outs for all the things. Like whether you're going a job path, whether you're going a fundraiser path, whether you're going like I don't know what I'm doing path, and like I need to talk to people to figure it out. You know, happy to help you on that. Can you talk to me afterwards or go to capitaldreamjob.com/stopghosting on May 20th, and look forward to seeing more of you now that I got an announcement about you.
Thank you. And by the way, anyone giving an announcement, feel free to email me or Martin afterwards, and I can do a roundup that I send to attendees as well. I got you in a second. We got one over here, and then two more, and then we're gonna wrap.
Good evening, ladies and gentlemen. My name is Idris Muhammad. You might know me as Sean Gadigan. I am the creator, inventor, and founder of Guardian Network. It is a platform, but it's also a sequence that you're able to put into the back of your phone and target a special group that you trust and deal with them and interact with them in real time. It's the fastest way of connecting with people that hasn't been invented yet. It's patent pending, and at the moment I'm speaking about it, I will be giving a live prototype expose later on. Nice to meet y'all.
Good evening, everybody. My name is Parker Bunton, owner of Faro, that's PH Aero. We offer fractional procurement services. I believe procurement is a misvalue in a lot of businesses. So I work to manage your contract, ensure you're maximizing return on investment in your purchases. In addition, the main reason I'm here today is I'm exploring a product called Fairview to help consumers engage in that procurement process in their everyday transactions, ensuring they find a fair and reasonable price. I'm sure we all, well, maybe we're from the city, see the gas pumps, or we go to the shelves and we look at that price and we're like, there's no way, they're gouging us. I'm aiming to make that cheaper for all of us, make you feel confident in your purchases. But the tech is a bit complicated, so learn how to raise some money to make it happen. Thank you.
And Parker's always dressed sharp with his best colors. I got one more over here. Cool.
Hi everyone, Rajani here. I'm fractional chief of staff at Marinext. We're standardizing menstrual fluid collection so it can be used as biomarker for endometriosis or infertility. And we're looking for engineers right now who can help us prototype with a background in chemistry, biochem, really anyone with knowledge around prototyping with biospecimen related materials. So if you have one in the room or you know someone, please reach out to me. Thanks.
Awesome. Thank you so much. I appreciate it. I appreciate this community coming together and supporting everyone. So make sure you connect with each other. If anyone can help any of the people who just spoke or anyone else in the room, I encourage you to connect and do what you can to support, because when you give, it always comes back. So that's what this community is all about. Without further ado, I want to kick this thing off. So before we do a panel discussion with investors, with a very special keynote from Victoria Polsky from Startup Station, who I've known Victoria for as long as I've been an entrepreneur, which y'all can guess what that number is. I don't even know what it is. But one of my oldest friends in the space, and she's got a lot of great insights on mistakes that founders make when fundraising. So I'll let everyone give it up for Victoria. She's going to kick us off, and we'll get into it.
It's such a pleasure to be here, and it's my first time on Grove Street. So if I was ever to make a trip to New Jersey, to be keynote in Jersey City, check it out. So hi everybody, I'm Victoria Polsky. I run the Startup Station. where I help founders tell their financial story when you're fundraising, so that when you talk about numbers, the investor size don't glaze over, you understand where they're coming from, you're stronger, and it helps you execute after you raise. For the past more than 10 years that I've been doing it, I've helped founders raise more than $50 million and taught over 20,000 founders finance, financial modeling, valuation, and stuff like that. But here I'm talking about fundraising, and this is based on my recent relationship, which is called Speak Pitch, and it's an exclusive event series that I've been running for over a year. In that event, we match founders with investors in one-to-one meetings. And what I'm going to share today is based on the conversations with investors that I had of why they rejected the startups. And so 5 reasons why investors say no. Number one, and a very obvious one, if you approach the wrong investor. Now, with all the resources out there and all the AI available, you really have no excuse to approach an investor where you're not a fit by stage, sector, and check size. If you haven't done your homework and you're utilizing those tools and you're writing those generic messages, dear sir, madam, would you please look at my pitch deck? Okay, this is a missed opportunity. That investor could be your door to another investor where you're actually a fit if you approach this connection thoughtfully, to maybe a board member, to maybe a key hire, to maybe a co-founder. So be thoughtful when you do your investor outreach and only reach out to investors where you are a potential fit. How should you do it? Look at the portfolios of the companies that they invested. Look at Crunchbase, and of course use public information available to understand their thesis. Mistake number 2. And what I'm going to say now is going to sound obvious, but it actually comes way more often than you think. It's the founder's inability to articulate their problem, the problem that they're solving, and why their solution unique and defensible. In my event, that accounts for more than 50% of rejections. And this is something that would only come out in one-to-one introductions. Now, you need to be able to know which problem you're solving. If you approach a big market, you need to have an angle. It needs to be simple, it needs to be clear. And then your solution, think about it like, why are you the purple cow? Especially if you're entering a space that's already crowded. Your solution needs to be 10,000 times better than anything else in the market, and it needs to be defensible. What is your secret sauce? What is your competitive advantage? In my event now, I begin asking that question, and if a person can articulate it, they don't win. Reason number 3, the elephant in the room. And I'll give you an example. Let's say you have a seed stage startup that's been in business for 10 or 5 years, still seed stage. Now, what happened there? There can be valid reasons co-founder left, no product market fit, change the business model. However, for the investor, it does not look good. In fact, I know funds that would not invest in startups that have been around for more than 5 years that are at a certain stage. Now, what should you do if you have a situation that's a red flag? Should you lead with the red flag? Hey, I've got a problem? No, don't lead with the problem. Lead with the vision. Lead with the traction. Lead with the plan of how you become a unicorn. However, if this comes out, do not let it die unaddressed. Take control of your narrative, because that is when you become the leader, as opposed to the investor taking control of the narrative and then making conclusions that are most likely not going to be in your favor. Reason number 4, do not argue with the investor. Now, if you want to argue with the investor, you might as well close your laptop, pick up your coat, and exit the premises. Your meeting is done. Now, let us understand that investors are not there to provide you with emotional support. They're not motivational speakers. If you want a motivational speaker, you sign up for Unleash Power with David with Tony Robbins. And there you're going to get a different experience, walking on fire, realizing your dreams, etc. With the investor, you are there to get market feedback. In fact, I would encourage you to invite those questions that are uncomfortable, so that you sharpen your pitch and you address parts of the story that are still unpolished. Every meeting is a learning experience. And in your entrepreneurial journey, there will be so many chances where you have to deal with uncomfortable situations. So if a question can destabilize you, you gotta ask yourself a question whether you're ready to be an entrepreneur. Okay? So do not get destabilized by questions. Do not get defensive. Invite that feedback. If you're not able to answer, say, I'm going to think about it. Thank you for bringing that up. I'm going to get back to you. Okay? Now, it can be that an investor is abrasive. It can be that it's not a personality fit. This is fun. And then you can thank the universe for allowing this information to be revealed early so that you can proceed with the due diligence process and get that revealed when you're, they're already on your board. And then that's it. Every interaction gives you something to learn from. And finally, number 5. And I'm going to look at the notes so that I don't lose my here's a good story. So that's the inability to articulate why you are the person to run your company, or why you have the team to run it. And I'll give you an example. I recently went to a pitch competition, and one of the founders who was pitching, she was asked a question: what makes you the right person to run a company? And she got all aggravated, and she started saying, well, you should know that I just exited a really acrimonious situation with my co-founder where I had to put $500,000 in escrow account, but I won. And now we're achieving 30% growth month to month. And the thing is, at that point, I stopped listening. I didn't care what she was achieving. All I was thinking, what happened with the co-founder? And who is the problem? Because we know in every dispute, there's 2 sides of the story. And was that co-founder who was getting screwed, or was she getting screwed? And how am I going to know? And is that the risk that I'm going to take? Because you're going to lead with conflict. When you are asked why you are the right person to build your company, you lead with vision, with domain knowledge, with passion, with alignment of how you're able to attract people to you, not repel. Now, of course, it can happen with some people. You may have a conflict with them and they may exit. But you're not told that that's the reason to invest. So to conclude, the 5 reasons are: do not talk to the wrong investor, know what problem you're solving, why your solution is defensible and unique, know how to address the elephant in the room, do not argue with the investor, and know how to explain why you are the person to take your company to the stars. Thank you so much. And if you need another
Thank you. Well, I want to invite up our panelists to come on and get this conversation going. And while everyone's getting settled here, I'm going to grab the end. Actually, I'm going to grab this one just with the. That's thank you. So I have a little musical chair here. Who in the room is a founder? Or a co-founder? Nice. You got any investors in the room? Cool. This is like a circus act here. All right, everyone take a mic. Yeah, without the music. All right, just press the button and make sure we'll get we'll pass the mics throughout.
We can echo.
Good. There we go. All right, so we got our founders and investors in the room. Okay, I want to also say, are all the mics working so far?
Yes. Check.
Cool. As we go through this, I'm going to moderate the conversation. I have a couple questions that I prepared, but that doesn't really matter. What matters here is what the founders in the room want to know. So I'm not going to do the thing where I wait till the end and say, all right, now let's do some questions. If you got a question throughout, just shoot your hand up. I'll call on people, and I want this to be an interactive conversation. So with that said, let's kick off with just a little round of introductions, kind of going down the line, so high level who you are, what you're working on, and then we'll jump into it. So Justin here.
First, Victoria, thank you for listing those 5 reasons. I'd say 98% of the pitches I receive, they make at least one of those mistakes every single time, and it's just a waste of time for both of us. With that, my name is Justin Murray. I have been a member of this Jersey City tech community since 2017, I want to say. When I got involved in the ecosystem, I'm an ex-founder, ex-operator, and ex-community builder. And currently I lead ventures for Plug and Play. If you're not familiar in New Jersey, if you're not familiar with Plug and Play, we are a very active venture capital firm investing from pre-seed through Series B, specifically in enterprise software. We do about 250 checks per year. Average check size ranges from 100K for the early stage to 2.5 million for the later stages. Within New Jersey, I manage all of our investment pipeline, our relationships with our corporate partners or LPs. And we have 2 accelerator programs. One is NJ Fast in Hoboken with Prudential and MetLife on accelerating financial services software based on the focus areas of said corporates. And then down in Princeton, we're doing an AI Center of Excellence called the New Jersey AI Hub with the board of the hub, which includes Nokia, CoreWeave, Microsoft, and Princeton University. We accelerate anywhere from 30 to 45 startups per year, probably invest in about 15 to 20% of those. And yeah, looking forward to meeting you.
Appreciate it. Over to you, Danielle.
Awesome. So my name is Davion Lewis. Super excited to be here. Thank you, Ben, and your wonderful organization. You've always been fantastic. I'm typically the youngest person in the room, and it's just because I like to kind of understand what's happening. I've spent the last 10 years in capital formation and fundraising, traditionally for larger funds, TPG Capital, HIG Capital. These are your guys that manage, hundreds of billions of dollars. And what I said was there's a dying need for that kind of institutional know-how of what an LP desires to be delivered, not to the MDs of TPG, but to folks like yourselves who kind of really need the know-how of what they're thinking, right? Ideas are great, even numbers are sometimes good, but the ability to translate those ideas to your end client, sometimes that's where the rub is. And so that's where I kind of come into play. Not an investor, think of me more of your advocate. I try to prepare both emerging managers and founders for how they would approach the guy to my left who told you off bat, a lot of times it's a waste of his time. So I try to save you guys both some time, and that's why I'm here today.
Awesome. Thanks so much. Over to you, Renee.
So Renee Bastone, I'm a venture partner at Covenant Venture Capital. We'll get back to that name in a minute. But I want you to know, since we're going to talk a lot about AI, that I started off in not artificial intelligence, but natural intelligence. So I was studying learning and memory at Columbia, thinking I was going to get my neurobiology degree, but I liked entrepreneurship too much. And I got a degree in biomedical informatics instead. Spent a lot of time in this space, doing consulting. I'm a 3-time founder in the space. I have worked back at Columbia running big data centers, that sort of thing. And spent time at a venture studio. And for those of you who don't know what a venture studio is, a venture studio, you don't invest in other people's startups. You build the startups. You decide this is what needs to be built. So I helped Team 8 build their digital health venture studio. And now at Covenant, I run the asset that's venture capital, because even though our name is Covenant Venture Capital, we're actually an asset management firm. So we have private credit funds, we have late stage deep tech investments in SpaceX, OpenAI, Anthropic, Anduril, these types of companies. And then venture, which is our high risk, high reward asset. So we've been doing this for a couple of years. New Jersey is near and dear because we are a qualified venture fund for the New Jersey Economic Development Authority, which means that our checks can go up to $8 million in match from the state. So all of the investments that I'm doing right now are in New Jersey. So they're either New Jersey companies or companies that we bring into New Jersey. So we can talk a lot more about this, and we're gonna hit upon a lot of the topics that I think that Victoria mentioned. And I want to thank both Ben and Buva who invited me to be here today. Always great events, and looking forward to the conversation with you all.
Thanks so much. Eileen, over to you.
Hi everyone, my name's Eileen Kim. That's Eileen, like Eileen over. I am a program manager for the pre-seed and seed fund at New York Ventures. That's the venture capital arm of New York State. And I've been an entrepreneur, so I know how hard and painful it is. I know what you're going through. And it's a super tough and hard journey. So I really admire people who decide to embark on starting their own business. It's a really tough thing to do.
I feel like you need to be half bold and half insane. That's why we're all here together, right? Thanks. Over to you, Buba.
Welcome everyone. I'm the founder and CEO of Wallet Max, co-hosting this with Ben and Amari here. I live in Jersey City, so this is very close to my home. At the moment, I spent several decades on Wall Street, fundraising for investment banks, capital markets, advising on enterprise transformation, capital allocation, and so on. Then I got a lot of interest and passion in impact investing primarily, predominantly fintech or financial inclusion, AI, ethical AI, and also a lot of climate investments. So I partnered with my alumni network at Columbia University, where Renee and Victoria are all from, and I started investing in a lot of startups. Like Victoria mentioned and like all of us mentioned, when I was investing in startups, many times I kept repeating the same thing as to what they could do before they come to me for an investment. So since I was doing that quite often, I also launched a fundraising mastermind program, which is more like a 12-week fast track to get you from where you are in the fundraising journey to a due diligence discussion. What happens after the due diligence discussion is between the startup and the investor, but more so also I focus on the seed stage, because pre-seed there are a lot of friends and family, bootstrapping and angel investing happening. Series A and beyond there are a lot of opportunities, but seed is where you have some traction but you are unable to grow or scale because there are a lot of questions, there is a lot of criteria that investors keep changing or economy keeps changing. So fundraising mastermind is typically just focused on seed startups. Actively fundraising, we are not just networking, but we deploy capital as well. If we are not the right fit, we connect them with the right investors. So happy to be here.
Awesome. All right, we got a very impressive panel here, so a lot of insights we're about to get into. The first question I have is intentionally vague and high level, because I really want to get your thoughts on this without leading the dance too much here. And this is, how does this new wave of AI change the fundraising playbook for startups? Because I alluded to this earlier as I kind of kicked off, saying that nowadays solopreneurs or founders can do so much with technology, create AI agents to lead their sales teams, code, all that stuff. So how is this changing the dynamic of fundraising? I'll just leave it at that and just kind of want to get your thoughts on what's happening in the industry here.
I mean, happy to kick it off. I think it's just pushing up the goalpost. Investors are expecting founders to get more done in a faster time. So you no longer, unless you're extremely well connected, and I'm talking Stripe Mafia or X multi-$100 million exit, you're not going to be able to raise a massive pre-seed round with an idea and a napkin anymore. And it's not even just about building the MVP. That's also the easiest it's ever been. So we care about traction, defensibility, the team profile. And I think that's just going to continuously get pushed out further and further. More and more seed rounds today look like Series A rounds from 2018, 2019. So happy to pass it down after that.
Yeah, I mean, I think that's exactly right. Maybe to give you guys a bit more context as to why that's exactly right. You have around 60 to 70% of money that's gone into startups last year all had some AI application. So what that means is AI is now table stakes, right? In the same way that a few years ago you need to have a good idea, you need to have a large TAM, now you've now added AI to the table of, you kind of need to have it, it's not a special thing. And that is why, to his point, it goes from, okay, this is a great idea, to let me show you how this idea actually translated once I tried it. The other data point as to why that goalpost has gotten pushed out is because of AI, call it 50 to 70% of your fixed costs are likely going to be driven down, right? So no one is looking to fund something that they need to really build unless there's a technical expertise. They want to fund things that have already been built to some extent, and they just want to accelerate it with their check size.
Thank you. I've misplaced my microphone.
We have one
Any of you find the
last
microphone wandering around, let me know. So I agree, but I'm also going to be a little bit contrarian. To some degree, things haven't changed. When a startup approaches me and talks to me about their tech, a couple of things happen. Number one, typically I stop listening because I don't want to know about your tech. I want to know what business problem you're solving, and do you have a business model that's going to work for solving that problem? If you're in healthcare, do you understand how you're going to get reimbursed? If you're in another area, do you understand how you're going to get paid? TAM is important, but I usually brush off TAM. All I want to know is that it's a big enough market that you can grow. Most startups, what they do is say, it's a $100 billion market and I'm going to get 10% of that market. How are you going to get 10% of that market? I want to see a bottom-up analysis that you, even if you haven't sold yet, that at least you've thought through, this is how I'm going to address this market, and this is how I'm going to obtain the market share that I'm telling you I'm going to obtain. So none of those things have changed. The use of proceeds, yeah, maybe you squash that down, but I still want to know, how are you going to use my money to get to your next value inflection point? When you do that, I'm paying attention. So those things haven't changed. I think what has changed is the capital efficiency of startups has actually gotten better. Ironically, though, I agree with you that the series are bigger, right? Seed is bigger. So it's interesting, right? So less expensive to create these startups, but you're getting bigger rounds. And in part, my first startup was right before the .com bubble. AI ain't going anywhere, just like the internet bubble didn't go anywhere, but we have very inflated valuations right now. That may change a bit over time. So keep an eye out for that. But still, the fundamentals matter, right? So that's my message to you all. The other thing that I'll say, which is an extraordinary pet peeve of mine, don't tell me you've got a hand-wavy AI company, right? So I do agree that AI is important.
Yes.
However, I want to know that you are solving a focused problem with that AI. So the startup we just invested in brought to New Jersey, Hill Research, they are an agentic platform in clinical trials. But what that actually means is they're focused on statistical programming. They have an agentic platform for statistical programming, which is a significant bottleneck in late-stage clinical trials. And when I met them at JP Morgan Health last year, they led with, this is the problem that we're solving and this is how we're going to make money. So keep that in mind. Your technology, to me, comes second. Then I want to know that you actually have the technological chops to pull it off. So
to your point, it's like a lot. I think people are all saying, "Oh, we got an AI-fueled startup," but that's becoming to the point, like saying, I'm an internet-fueled startup. I use technology. It's like that's not mattering anymore. So it's all about how you use it. What I'm seeing is also you can build prototypes and things like that faster. And I think the harder part, which I would want to see, is how many customers they actually have. The actual go-to-market, I think, is the current hard part with all this technology. So this is my 2 cents. What do you Eileen?
So there's not much that I can add. I'm basically agreeing with these guys. I mean, AI is so ubiquitous now. It's like, oh yeah, I'm going to use email. It's like, I'm going to use AI. That's what it's become. So it is back to the fundamentals, back to the foundation. Is it a great idea? Do you have a great team? What's your moat? Is it defensible? All of that.
No, I completely agree with everything that's said. So without repeating everything, let me just add my 2 cents. I would probably say it's sector specific also. So if you are infra heavy, capital intensive like a climate tech or a healthcare or a hard tech startup, then it makes sense where you need funding to build or launch your product into scale. Any other scenario, you need to have traction. Funding should only scale. Like Renee mentioned, if anyone says AI-powered startup when they are pitching to me, I probably would switch off because we need to see a solution that works. Today it's AI, tomorrow it would be quantum or something else, but are you able to sustain the technology wave is what we want to understand.
Cool. Yeah, over to you.
I have a question for Davian. You mentioned that AI is decreasing development costs. I agree, like compared to last year, maybe 2 years ago. But I don't know if other founders in the room, I'm in a situation, my co-founder is in a situation that we are like slaves to Claude, right? Like our context windows getting shorter and shorter, and I don't see that getting better. So I always joke with my co-founder, use Claude, but don't forget how to code. Because like we're getting there. So I would like your perspective on that. It's cheaper now and it's cheaper than it was before, but I don't see that staying that way.
So your view is because Claude is so helpful that the value is going to be more and therefore you have to pay more for it?
I don't see their business model being sustainable either, because now they're getting more people on the platform. So like my context window now is very short, right? It is cheaper because I only have 1 engineer doing the work of like maybe 4 engineers. Yeah. But if if you ask me if in 2028 I'll be able to run my company like that, I'm not so certain.
Yeah. I actually don't have the perfect answer because you're absolutely right. I think there's going to be a balance. There's kind of a math problem that you're going to need to do for your business. There's an article I read recently that said we fired 2 of our AI agents because they were too expensive, right? And we hired 3 other regular workers, right? And so I do think that problem, to your point, is actually already peaking its head up. And I think it's gonna come out to what do you wanna optimize in your company more, and then what does that price kind of get you? So I think it's gonna be a formula, if I'm being honest. And just as well as you had a break-even formula 10 years ago, you'll have to do the same kind of computation now. And so that's my 2 cents, but happy to open it up as well.
My perspective is open it up to the market and come up with your own internal benchmark. So integrate different models, identify which ones do better tasks more efficiently, and then make sure you have the APIs set up so that they switch based on functionality. So like Cloud, obviously deep research, but if you have a chat functionality for customer service, you can use like a GPT, and then you identify when Gemini can come in, and then you can take advantage of different solutions that sit in that middleware layer that can then map and route it for you. So a lot of startups are going into the space specifically to make Cloud cheaper for other companies. So I'd start researching that.
Cool. Thanks, guys. Let's keep that going with the crowd engagement. Yeah, over here.
You guys mentioned what you don't want to see in a startup or what you don't want to see in a pitch. What does a perfect pitch look like to you? Is it really just confidence? Is it clarity? Is it highlighting the problem at hand? What is it when it looks perfect to you?
Yeah, I can take it and probably would let others add. I would say the founder or the founding team, because I typically bet on not the idea, but the founder. There are so many ideas, anything could go wrong, but if the founder is not able to, number one, execute or pivot, or is not able to take feedback, then no idea is going to scale or expand. So that's the number one. Number 2 is definitely having the repeatability of what you have achieved in terms of revenue and customer at scale. If these 2 are not coming through in the first few minutes, then probably it's not helpful.
I like to see a founder who's really passionate and excited about their company, because you are going to have to basically sacrifice everything else. You're going to have to sacrifice your friends, your family, any free time, vacations, going out at night. So you really have to love what you're doing and think there's nothing else I'd rather do. And so I want to see that passion from the founder.
And you got it too.
The best you have said so far. This is the best.
Yeah, I agree with the above, and as I gave the example of Hill, that founder came to me with a story of the problem she's going to solve, how she's going to solve it, how she's going to make money, and in her case, pre-seed, she was already generating 1.2 million in revenue. So that counts. Now, what counts for the follow-on round I just did in them is, did they grow that revenue? They grew it 5x. And are they on track to do it again? Because that's the repeatability piece.
Yes.
And we were having a discussion with another startup in a similar situation where they're saying, how do we get to the 500 million valuation? Because they're at that point. And they're going out and getting rejected. People are saying, interesting, but they're not getting there. Why? Because they're not there yet. They've already multiplied from last year their revenues, but they're concentrated on a few deals. So back to repeatability. Is it repeatable? They don't believe it yet. So they have to go out and they have to generate more cash. Early stage startup is going to be different because you're not quite there yet. So there, a lot of it has to do with how does the founder present? Is it believable? Do you believe that they have the grit to stick it out for 10 years or more that it takes to make this company happen? Do you believe that they and their team are smart enough to pivot if what they're doing isn't going to work? To Buva's point, a lot of the times what you start off doing is not your primary product over time. I want to know that your team can actually execute even if you're switching gears. And the rest of it is the fundamentals that we talked about, right? We're also thesis driven, so this is all within the constraints of my thesis. So I'm going to be looking for a founder that fits into what I think is important, for example, in digital health, in whatever area you're in.
I agree with everyone's opinion on the founder, but I actually think timing is the most important thing. The founder of Seed Investments, Mike Maples Jr., came out with a book 2 years ago where he talked through what a point of inflection was when it comes to launching a company. He wrote the check for Lyft because he specifically convinced the founder to develop a mobile app after the founder was currently selling Lyft as like Verbo online, where you could book it to the airport in advance. The reason why Mike called up the founder and said, I won't invest unless you have a mobile app, is because the iPhone 3 was coming out in 6 months and it had the first ever GPS chip, so that you could use it on the go. So I think meeting an investor whose thesis lines up with your point of inflection is the ultimate yes from an investor standpoint.
I'll piggyback on that because I agree 100%, which is why I said thesis driven, but also it points to something else which I want to add, which is the founder coachable. You want founders to be, out there and hustling, but you also want founders that can listen to the experience you and your team have and do something like this.
One thing I want to add from a good mutual friend of ours, Andy Caruso, who's an angel investor, who's supposed to be here tonight. He's not here, but he was on my podcast and he gave me some advice of his strategy that I thought was very insightful. And it's the 4T strategy. So it's timing, traction, team, and technology. He says if one of those doesn't check out, he doesn't invest. So all 4 of those I think are very important. When he said that to me, that totally stuck, and I think about that when I build my companies. Timing, team, traction, and technology. Yeah, all 4 of those.
We have the same thing in plumbing.
Nice. You still have the plug button.
Did you guys copyright that?
And you did it. I want to ask one more question from the audience, and then do you want to add something?
Well, just very briefly, I think all that we just said were kind of things that get you to the actual investment. Your question was like, what happens in that perfect pitch? And candidly, that's a big question because everyone's different. But I think having the concept of like, your goal is to get another meeting, traditionally. And so a lot of times the pressure of like, am I gonna get a check out of this? That really shouldn't be your focus. You need to be myopic and execute what's in front of you to get the next meeting. And I think all the attributes that they're talking about will come out in that meeting, right? Did we ask you a question that stumped you? Well, okay, you know what? I thought about that. Here's what I would do, right? And even for me, I'm very, type A. That's why I came from, TPG and these types of firms. I had a hard time when people said, you know what, Davion, I don't think you thought this through, right? And I would push back instead of saying, well, actually, I did think about it. You're right, this is an issue. See page 5 as to how I'm thinking about addressing it. What do you think, right? And so I think all those attributes will come out, but very important to understand that, know where you are in that process and get the next meeting.
One that I heard from the audience earlier is they were thinking about the company and they're saying, we're starting some traction. Is it time to get funding now, or do I keep bootstrapping? And when is the right time? And I've heard that question time and time again from the audience. So I would like to hear from whoever wants to share, just like, when's the right time to stop bootstrapping, finally get the funding, / does everyone need funding? Or can they just stay bootstrapping and be successful that way? So I'll just kind of open the floor there.
So I just had this conversation over at the bar with a startup.
Nice.
And my response was, it depends, which is not what you want to hear, right? So it depends, right? If you can, first off, it depends on what your endpoint is. Are you building a lifestyle business, or are you building a really scalable business, right? And there's no right answer. Lifestyle businesses can be quite nice, right? The second question is, there's always this tension between giving up equity and speed, right? Everybody has to answer that for themselves. If you're looking around the marketplace and there are people who have taken funding and they're growing way faster than you can grow, probably that's an indication that you need to start looking for funding. The other thing, which is the easiest one, is runway. How much runway do you have if you're bootstrapping? You may not have enough runway, so you need to start thinking about other sources of funding.
Yeah, I completely agree with that, but just one quick thing is, if you don't need funding, that's the best thing. But if you need funding, even if you are coachable, sometimes you may want to challenge the investor. Because I know a couple of startups who were supposed to become unicorns in last mile delivery kind of sectors. They did not become a unicorn because the investor invested and pushed them to enter a new market too soon, and they had to literally declare bankruptcy because that was not successful. So get to the traction and growth as much possible, be coachable, but also challenge the investor if it's not the right thing for you to do.
Awesome. So that question over there, then Victoria, next.
Actually, just wanted to add a comment.
Yeah, comment.
I just want to say the best funding you can raise is your revenue.
Nice.
100%. I mean, look, by the way, since you gave me the mic back, the other thing is,
We fireside chat now.
your investors aren't always necessarily aligned with what you think you need. Remember that I'm saying this as an investor. Your investors are looking out for their investors. They've got to return money to their LPs. And we don't do actually spray and pray because I have some challenges with it. I think a lot of the companies that fail in spray and pray fail, if you guys don't know what it means, is you do a lot of startups because most of them are going to fail. And you need one of them to return your fund. And so now, all of that pressure is on the startups that they think are going to return their fund to grow bigger and bigger and bigger. And that may not be the natural trajectory for your company. So take it with a grain of salt. Because I've been a founder, I'm a very founder-focused investor, and I try to work with these companies, and I'm having this conversation with a company right now who thinks that they want to grow to IPO. And really, is that what you want? Because if you can sell at $300 million, it's transformational for you and your family, right? So take it with a grain of salt.
Yeah, I was going to mention something like that. Just to contextualize, and we talked about this in the back, there's viability of a company, which is just survival. Like, there are really great companies that, and candidly, as I'm doing my boutique consulting, I think this is where I belong, right? Like, I want to make a lot of money doing my own company, right? That's a viable company. It'll get me a nice life and a family. And then there's fundability, right? My company is not going to be fundable for a VC because guess what? I want to stay steady. And to your point about returning a fund, that looks like a 10x return minimum, right? Now, if I do a 10-year, 15-year business, maybe I sell a buyout to a TPG or a bigger company because guess what? They're not looking to return the whole fund. They're looking for a nice 1.5 to 2.5 times return, and that might be where I sit. But in terms of VC funding, you have a very successful company and it's viable, but it's not fundable because there's no 10 times, 15 times, 30 times return that you can draw a line to nor the investor can.
Cool. Want to get to this question over here?
Well, and related to what you all are talking about, I'm wondering because earlier you mentioned are you doing a lifestyle business, or are you doing let's be a unicorn and all this. I'm curious for you all when you're looking at a founder, maybe you have someone like you were describing for yourself. I'm doing a boutique thing for a while. Maybe I'm doing a lifestyle thing, for a bit. If that same person wants to now get back in the unicorn creation game, how do you all see it? I mean, is it just as long as there's a story that makes sense, or is it, no, I want serial entrepreneurs or people coming out of corporate? How do you evaluate that when looking at investment?
So I don't think there's a correct answer here, but I think the founder's ability to storytell around why they're the best person based on that experience is what's going to sell me at the end of the day.
Makes sense.
I just wanted to add about your question about whether or not you should fundraise. I think two things you should think about is the sooner you fundraise, the sooner you actually have a boss. You're no longer your own boss. You're accountable to your investors. And then two, the sooner you raise, the less of your company that you will own. You'll have less equity at the end of the day. So if you can hold out for as long as you can, you'll own more of your company.
And if they're a really good investor, the idea is you think you lose equity, but it's a bigger pie now. That's where it all comes down to. Is okay, I'm cool giving up points if I think they're really going to help me get there. So strategic investors, I think, are where you'll get the real value.
There's one more thing to add to that, which is you need to understand where your value inflection points are, because you can raise at the wrong time based on that. You always want to raise after you've increased your value substantially. That means more customers, new products, all of the types of things that increase your valuation. So you want to get there, because otherwise you're going to raise at you may not get the funding because investors will say you haven't grown enough. But B, if you do get the funding, you're giving up a lot more of the company because your valuation is lower.
and just to, like, I'm a linear guy. So like just for example, right? Like you want $1 million. Your $1 million is maybe to hire somebody else to put an AI enablement layer on, and you're valued at, I don't know, $5 million. So you're gonna give away 20% of your company. And if you don't actually need that 20%, what is it to hold out another 6 months, right? To have your customers increase, to then have your revenue increase, and now that $10 million is worth $20 million. And guess what? You still only need $1 million, right? So that's the math problem that I do in my head. Like, the dilution is real, and the sooner you're running to someone else to fund it, one, they'll smell it, but to the point that's being made, you actually do yourself a disservice. And so I think obviously network when you can and have the folks on the ready that you can call when you get there, but actually just spend time growing the company.
Absolutely. I have one more question, then we have one or two more for the audience, and then we'll continue some networking afterwards. And the panelists will be here so you could line up for the superstars. So this would be the Jersey City Tech Meetup if I didn't talk about New Jersey a little bit. So want to ask those who are involved with New Jersey funds, what are some benefits or challenges for New Jersey-based companies, specifically seeking fundraising?
So our reasoning behind launching a New Jersey fund was actually multiple. So the way that we look at it from the early stage perspective is you're competing in this geography and valuations, and then once you get to the point of we look for 10 bag exits, you're then at a global scale. So the difference in the multiple is usually double what you see from bigger markets in like Manhattan and California, because the pre-seed rounds and seed rounds are usually inflated in those markets. So I think that's advantageous for good investors if you have a really good team and product. I think some of the issues is, for us being such a dense state, it's very bifurcated in terms of resources and figuring out how to identify said resources. So being at events like today is how you get around that, in my opinion.
So I'll add to that because I would be remiss. I'm on the NJEDA Innovation Advisory Council, so I see a lot of what's happened in this state. And I'll preface that by saying I built, when I was at the New York Academy of Sciences, a consulting group that helped governments in the US and around the world figure out how to leverage science and technology for economic development purposes. So I've seen a lot of this, right? I did this in India and in South America and New York State, et cetera. Over the last 8 years under Governor Murphy, the New Jersey economic development scene has completely transformed. It was, to be honest, relatively sleepy, right? And now you have the Innovation Evergreen Fund, which is what we participate in, where you can get 8 or 10, if it's a women and minority-owned business, $10 million in matching funds for companies that are either based in New Jersey or put their headquarters in New Jersey. The last investment we made was from Boston. We brought them to New Jersey. There are angel investor tax credits. So investors in my SPVs can get 35 to 40% of their investment back. They put in $1 million, they can get 40% of that back. So our management, we charge management fees like every other investor. They're a wash. It's like the state is paying them a management fee. You've got programs that will pay you $400,000 to quit your day job and become an entrepreneur. There are all of the programs of plug and play, 12 new strategic innovation centers in the state, including NJAI, which one of my companies is in. So there's so much that's going on here right now that really makes it extraordinary. And I know Eileen is going to talk about New York State as well, because that's what she represents. But it's really extraordinary. Also, from a geographic perspective, so think about AI and think about life sciences and think about health.
Supply chain.
The West Coast loves talking about how they've got all the talent. Guess what? They have a little bit more talent. Let's say it's 400,000 healthcare workers. Well, we got about 300,000 in the Northeast corridor. Have you ever tried to take public transit on the West Coast? It sucks, right? So you're stuck in traffic. We can get all the way from DC, all the way to Boston and take advantage of all of this really easily. In fact, I don't fly anymore. I used to fly the Delta shuttle when it was like a bus. I don't do that anymore. I take the train. So there is a lot going on here, and the proximity to all of these other states that have all of this talent, all of the university talent, there's a lot going on here. So take advantage of it.
Yeah, so I'm going to say that New York's just a river right away.
That's a place for Jersey.
We have the Tech Week coming up in Tech Week coming up in a month. Go to events there. I mean, you don't have to go there all the time, but for those weeks where there's big stuff happening, like New York Tech Week, Climate Week, go. That's where all the investors are. Go there. Sign up for events. Meet investors. You know, they don't invest in just New York companies. They invest in any good company. So that's my advice.
We got one or two time for one or two.
As a Newark native, I also must say there is a Newark Tech Week that also happens. No, but
They're gonna have a dance off at the end of the
and what you'll find is, to the point of like kind of the scarcity mentality, you'll find that like you'll be one of 4 people in a room with an ultimate check writer, right? Like, because people are overlooking the market, like that happens. As a comparison to the film festival, we also have a New York I don't know if you guys know the guy Lorenz Tate, and this is a little off topic, but it gets my point. He's this larger-than-life character in the film industry, and I'm literally in a panel, and he's here, and I'm sitting in the seat. It's not because he's any smaller than he is, because it gets overlooked. And so I think the benefit of New Jersey is finding these rooms where you do have proximity to folks who, if you go to New York, you're standing in a line for 3 hours.
Yeah, that's a great point. All right, so we have 2 more quick questions, and then don't let me forget to get a selfie with everyone in the room and the panelists. Over here.
Right. My question is, what exactly are you looking in a founding? When it comes to especially the seed round, so how do you see the founding team? What aspects are you looking in the founding team? So let's say there are like 3 or 4 co-founders. 3 are from tech, 1 is from the domain. Like, what exactly is the right balance you want to see in a founding team? That's my question.
Asking me? I mean, usually actually we don't see teams that big in pre-seed. It's usually 1 or 2 people. So I like to see that they have complementary talents. Like, for example, we funded a company that you could tell that the guy who really had the technical chops was not a people person. He was like, he looked very rough, was not happy. But he knew that he had that, he knew that he had this like disability. So his co-founder was this like happy, bubbly girl who just like made everyone smile and got everyone's attention. And so I would say a team that has, where their skills complement each other, in short.
Yeah.
Like that, if you have a 4-person team, you can't have 2 people who do the same thing.
Right.
You know, in a company that's, when you have a team that small. You know, everyone has to bring something to the table.
I do want to share something because I recently invested and it's going very well with everybody over here. I am always looking for people who can present the ideas that how addictive they are for the customer. Uniqueness is gone. You might be unique today, not tomorrow. If you're not able to sustain with the addiction in the product, your revenues are going to fall. And you'll have a very high problem in the seed stage itself. Second problem, which we are seeing right now, is that everywhere there is so much of noise around tech that nobody is focusing on sales and marketing. One of the co-founders have to be from sales and marketing so that the evolvement of the processes is changing, because the situation, the pre-seed will not be the situation, the seed stage. It will be very tough, very dangerous, because it's all about market share. If you cannot present how to do market share, you're eventually failing. And the third thing is, if you are not able to sustain your capital, like if you are not able to find the right people, because vision, of course, you need to have. But if you are selecting wrong people, that's a disaster, because you might want to have an empty seat rather than the wrong person in the chair. So I just made 3 decisions correct in the company. I saw that the person, it was a crime and investigation company. One of the co-founders was absolutely brilliant in sales. Absolutely brilliant in sales. They were also able to understand what their domain was and how they were going to get the market share. Their sales and marketing strategy was absolutely clear that how they were going to make, and they were very clear that how they're going to drive the addiction. for the next 5 years because they were working on 250 AI tools, both on tech and marketing, creating their own recipe of AI, working with connectors and stuff. By the time someone else even touch it, they go 10 steps ahead. So just my recent investment, I'm sharing with all of you.
I appreciate that. Thank you. You're welcome. We got time for one more question to close us out. I saw Parker raise his hand, so let's make it good, brother.
All right, I'll try my best, make it full circle. So, one, Renee, this is a slight shout out. I appreciate your shout out to public transport. You have me on LinkedIn. I do work for the MTA full time. I appreciate that externality of our economic benefits. So thank you very much. I'm in procurement. I give the money back to small businesses. But on the other end, and I think this ties into what Victoria, her first point of the wrong investor, right?
Oh, yeah.
How do, and I think this is my procurement mind, as you take out all the context, what are the constant qualifiers of a good investor for your business? How can I say, this is what, maybe 1, 2, 3, at least I can look here, 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 check, 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 and I want to have a conversation.
I think the obvious answer is everything that's not money. So what new rooms can they enter you into? What unique insights can they give you and your team? And then depending on the investor, they usually have some type of specialty. So like you have primary venture partners in New York City that has an incredible talent network. And then like for us at Plug and Play, we work with 500 of the Fortune 1000. And I meet with these corporates weekly, understanding what they're buying in the market, and that's how I get that point of inflection for my thesis. You have other investors that may have a lot of product experts that can be fractionalized and implemented in their portcos to help you with product development. So I think trying to unlock a few of those from different investors to make almost like a cohort and or a new team is the best way for you to identify a good investor versus bad one.
I think that's really well said, and I would add timing. Depends on what stage your company's in. You may need something different at a different stage, right? You may have now your MVP and your early customers, and now you need to scale. You need someone like Plug and Play who has a distribution network to help you, right? So it depends on the stage too.
I'll probably just add one last point. It's more about who's going to be there with you when you are faced with the challenge. You don't want an investor sitting in your boardroom asking you why this went wrong, rather sitting with you to figure that out. And also someone who has a good relationship, meaning I see so many founders trying to hide issues when they do an investor meeting. Rather, if you have the relationship, you're going to tell them, hey, there is a problem, I'm trying to figure it out. This is what I'm going to do. But if you have ideas, let's work on it. Because the minute you get the check, they are part of your team. So you need to make them work like they are in your team, right? Yeah.
And going back to the previous question, the one thing that we missed is this point, which is with your co-founders, what's the relationship? I actually just invested in a set of co-founders that are husband and wife. And of course, obviously, right, this is a question. Like, are they in marriage counseling? What's going on? Who gets the kids, right? So, but this happens too, and I had one of my startups where I walked away, I still have equity in it, but I walked away from it as a co-founder because we had different ideas about where the company was going to go. So that relationship is really important, whether it's with the investor or with your co-founder. That interpersonal thing is critical.
I leave it at Davion. Any final thoughts as we close out?
No, I think I'm done. Everyone said it.
I love that. I wish more people in the meetings I've been every day would say things like that.
Mine is very quick. References are important, I think. Ask for references of whoever else has gotten a check from these types of folks. Whether they give you that reference is telling, right? Now they're strategic. They're going to give you the 3 unicorns that have made it and they love and they go to golf with. So when you're in those reference calls, right, that's what they'll do. Make sure you're asking questions that can elicit a response that you feel and deem is worthy of your time. So.
Incredible. This has been a wonderful. Everyone give it up for our amazing panelists. I'm using it as a picture for your marketing team. One, I saw a lot more hands up. So this is obviously a topic and theme that's striking a chord with everyone. So I encourage everyone to hang out for a little bit and network and speak with the panelists. Make sure you connect with them, connect with myself. We do have to leave here around 7:45 to respect the space. But you know, there's a lot of bars nearby that we can pop into. Before we take our group picture, right after we close, if anyone can help us move some furniture, a couple strong people. Parker, you're always looking pretty good, so.
Thank you.
So we're gonna move some furniture back. I appreciate any help. Other than that, I want to get a picture with everyone, and let's do this. What community is all about.